Welcome back, my dear class 12 student. In our last video we have learned what is the balance sheet of the company and how it looks like. Because in case of company, you know, there is a Companies Act 2013. According to that we have to make your balance sheet, and the same time you need to make profit and loss account statement, not profit and loss account. So what would be the format of the profit and loss? What items comes under profit and loss statements in company? Today we will learn. So first thing is revenue from operation. There is a 2 years figure always in case of company's account. There is note to account. Revenue from operation means that is sales. Sales of a company. That is we call revenue from operation. We have to write both the figure, that is previous year and current year also. And what type of goods they sell, that is you can find in notes to accounts in details. Okay. Then there is other income. What is the other income? Other income, suppose you invested some other companies and from there you receive interest, you receive dividend. So these are the called other income. So and details you can find in note number 2 if there is any other income and what are the details of other income. Because the Companies Act 2013 says there is no mess in profit and loss account. So you have to give each and every details in your notes only, and total figure comes in here. What is the total other income figure comes in here, but in the other income which are the items actually come and what for this other income actually receive, this will be detail we will find in notes to account. So notes to account is very important in case of company's profit and loss statement and balance sheet also. And it is called total revenue. That is called total revenue. Then as you know there is expenses. This is the income part. So what are the expenses we have to make? First is cost of material consumed. In case of manufacturing company, they actually cost of material consumed means the raw material consumed. What the amount of the raw material consumed by them. Next is purchase of stock in trade. What is purchase of stock in trade? Purchase of stock in trade is your purchase of goods for the trading purpose. Purchase of goods for the trading purpose. Now changes in inventories of finished goods. Means there is a opening and closing inventory, opening and closing WIP, this change of finished goods. Only finished goods changes come in here. What is the difference between closing to opening or opening to closing? This difference will come here, not the closing figure of the stock, which actually done in profit and loss account. Okay, understand what is the difference. Now, actually in your NCERT book, the formats is already given. Your page number 166. So I am discussing this because the what actually items comes under here. Now third is work in progress and stock in trade. Now work in progress means WIP and stock in trade. Now what is the WIP value? WIP means work in progress. In the last class I have already discussed how the WIP stock we can measure or we can calculate, and stock in trade means that is your closing stock which goods are trading. Now there is employee benefit expenses. Employee benefit expenses. What are the employee benefit expenses? No, salary, wages, whatever you give for employee, that is the employee benefit wages. That may be direct and indirect. And notes to account you can find. There may be notes to accounts and you can find what is the detail. All are, if there is a notes to account you can find what is the details of cost of material consumed. Total is here and details of anything you can find here notes to account. Okay. Now finance cost. Finance cost means the amount we have. Sometimes company takes lots of loan as a capital. and for capital, as they taken loan, they have to pay the interest, and interest is the expenses, and this is actually in company they treat it as a cost. Okay, this cost interest amount coming here as a finance cost. Next is depreciation amortization expenses. Depreciation and amortization expenses. You know what is depreciation? Depreciation is a counts for fixed asset, and amortization comes for intangible asset. Okay, it is the depreciation made for fixed asset and amortization expenses made for intangible assets, as a goodwill, patent, copyright, etc. Now third is other expenses. Whatever the cost not come under this sector, that is cost of material purchase, changes in inventory, WIP's closing stock, employee benefit expense, all other finance cost, depreciation. If there any other cost that comes under other expenses, okay. Now total expenses you can find. Total expenses. Now there is a profit before extraordinary income and tax. Number 5 is a profit before, if you deduct from your total income from your total expense, you can find a profit, and profit before extraordinary items and tax. There is no tax already. Still we do not charge any tax, because after finding profit we charge actually tax whatever profit we actually made in this particular year. So we have to make a tax. Before make a tax in company, there is extraordinary items. What is extraordinary item? Extraordinary items, in case of extraordinary items, there may be loss, there may be profit also. Suppose there is a earthquake, suppose there is a storm, just like Amphan comes suddenly. The business cannot predict this type of thing. For that, the factory, there is a damage of factory set, or there is a damage of your selling process, marketing process, and that's for there is some losses actually happen, or some expenses you have to make, and that expenses you call extraordinary expenses and comes under extraordinary item. And same time income can be gained some cases. So these are the mainly extraordinary item. Actually these are not very much related to you for exam, but still you should know what are the extraordinary items. So profit before tax, extraordinary items. Number 6 is exceptional item. Now what are the exceptional item? There is a suppose exceptional item means you can not predict this item, this can be happen. This is same as extraordinary item. There is some exceptional items which can be comes and treated. Suppose you do not know what is the price of your stock. Okay, whatever, when we actually value the stock, we actually measure it as net realizable value or cost, whichever is less. But suppose that your stock price, whatever the goods you actually stock in your factory, the price is suddenly very low for due to some reason, some exceptional reason. Okay, suppose there is a government policy that goods which actually you are trading or you actually export, and this export is banned from the government side due to some war, due to some other cases. So for that you can make a loss, and that is called exceptional item, and that is also you have to value your expenses. Now it is profit before extraordinary item and tax. Okay, then you have to deduct the extraordinary item. Extraordinary items. This all comes under okay. After you are charging extraordinary item, this comes profit before tax. Profit before tax. Okay, profit before tax comes now. After deducting or adding back some of the expense or gain which are exceptional or extraordinary. Now we have to deduct tax. So number 10 is tax. Tax can be, I have said, that is a current tax, and that can be deferred tax also. Deferred tax means if your accounting profit and taxable profit is deferred and then deferred tax arises, and that can be you have to pay it throughout the 5 years, 3 years period. It may be positive, it may be negative, but current tax, you know from your profit what tax you have actually paid to the government, that should be deducted. So there is a tax. After the what happened? Profit during the year, and that will be you transfer to your balance sheet. No, sorry, that is a profit from year. From there you have to less your dividend. You can less your dividend. That is equity dividend, diluted dividend. You can less there. Okay. After deducting dividend, you have to transfer to his balance sheet. Okay. So therefore, after that you can do one also thing, that is what is your share value, equity per share, that is earning basic share value or diluted share value. Okay, these are not very much important for you. The main part is revenue from operation, expenses, profit before tax, and sometimes extraordinary item is not actually for your syllabus concern, and profit after tax, after deducting tax you can get the profit. So this is the format actually given by the Companies Act 2013, and here from the different type of question asked in company's profit and loss balance, what would be salary comes under what heading. Okay, then you have to say employee benefit expenses. So thank you for that. Hope you will understand and well and safe in your home. Thank you.